Hello, everyone. Happy Sunday afternoon. Another weekly preview. I did put up the sector analysis, so make you tune into that. And people who have joined the channel, there is a video about a new potential, well, it's a triggered play, one I really like. Really nice play. So, good afternoon, Patrick. Good afternoon, George. Go France. What is there some sporting event going on a global stage right now? Oh, it's probably a quieter afternoon. There's lots of things going on, and it's the holiday season. But I thank you, everyone who is tuning in live, and especially the people that are behind the scenes, not saying anything in the chat. So, all right, this is going to be a very key week. Stocks are at a top, entering overbought area at against some key levels. Cycles are at the top, and the underlying strength is not that good. We've had a substantial rally, but the breadth has been fading, and I am watching for a potential more significant topping pattern. And I'm sort of on alert with some exhaustion signals coming up, not for Monday necessarily, but especially for a little closer to mid to the end of the week for a more substantial rollover play. So please do keep that in mind. Hello, AB. All right. What do we have coming up this week? Tomorrow, December 5th. Oh, by the way, I might have to start tomorrow's live stream a bit early. I will put that in Discord if I'm going to, but it might start a bit early tomorrow because I might have to end it early. So that is what's going on, but I will let everybody know. We have tomorrow, right after the open, 15 minutes after the open to be exact, we have the S&P Composite PMI final numbers for November and the global services. Both are forecast into contraction. And that's the more minor to the non-manufacturing PMI, which is still forecast in expansion. If this comes into contraction, could get interesting. If it stays in expansion, it depends how much above 50 it is. That is at 9 o'clock Central Time, 30 minutes after the open. Also pay attention to the employment aspect of that, which was in contraction last time, and the prices. Those are the two subcomponents I'm really focusing on. Hey, Chris, thank you for tuning in. So we kick off the week with some important numbers after the open. Tuesday, you got balance of trade coming in 1 hour before the open, and then Red Book. So it's minor. Tuesday is very minor. Wednesday, you have the mortgages. You have non-farm productivity, very minor numbers coming in at 1 hour before the open. You have all your crude numbers, gas numbers for those energy traders. And that's about it for Wednesday. Tuesday, Wednesday, very light. Thursday, we have continuing and initial jobless claims. Other than that, very light. Friday, we got PPI for November. Forecast still at 0.2. Core PPI still forecast at 0.2, up from previous. So Friday is going to be another interesting day from an inflation reading perspective. Please keep that in mind. Then we have consumer sentiment, the preliminary numbers for December, which can be market moving. And that's about it. So remember, the Fed is in the quiet period. The quiet period started yesterday, December 3rd. So we're not going to get any Fed speaky. We're not going to get any speaky from the Fed. So at least. And then next week is the rate hike decision, which we'll get to in a second. But recap Friday, pretty mixed day. Some rotation into consumer defensive, industrial stuff. Again, you want more information to watch the sector overview. You can see the weekly performance, consumer cyclical, services, basic materials, and healthcare were leading last week. Technology, consumer defensive were in the middle. Industrials lagging was energy. But we have confirmed a potential double bottom, but not triggered it in oil. Here's your Fed Watch tool, sells 78% for the 50 basis point. Fear and greed still solidly in greed mode. Current market valuation. Net is fairly valued, but, getting inching up into overvalued with this rally. The yield curve model is strongly overvalued. The Buffett indicator is verging on overvalued. The PE ratio is overvalued. Interest rates, fairly valued. Margin debt, undervalued, but this can easily drop very low, and mean reversion could be tipping into overvalued again. So we're getting more and more things reading overvalued going into year end. In terms of earnings, not much going off from a major perspective tomorrow. SAAC's a more minor one, but is interesting. GitLab after the close. Tuesday, definitely AutoZone. That is a key one, especially for a consumer point of view. And then after, I always like to look at Dave and Buster's, but more so, we got Smith and Wesson and Toll Brothers. I am staying away from housing, anything housing. Wednesday, Academy Sports will be interesting. My big one Wednesday morning will be Campbell's, because I like to see how much they can keep passing along inflationary stuff to the consumer and their outlooks on stuff. I know not for me, but a lot of people will still be following GameStop after the close on Wednesday, and very then minor after the close. Not that GameStop's going to be market moving, but you got a lot of people still following it. Thursday, not much until after the close. Costco is key. Lululemon's key. DocuSign. Oh, poor Kathy. Broadcom's definitely key. Restoration Hardware. So Thursday after the close is interesting. Going in, and then Friday you got pretty much nothing. But remember, we got the PPI numbers on Friday. So this will be interesting Thursday, which can, with these combined, a lot of these combined ones can have influence on the market. And then we got PPI Friday. So do not ignore Thursday evening, Friday morning. Sitting here, I went over the individual indices from the longer term perspective in the sector overview. So again, please check that out. We are in weekly getting to overbought levels on the S&P. Cycles at the top. Percent Bs at a key top. So we could easily see a pullback, but your major pullback support zone is 39.58 to 39.11. All right. We have closed again above the 62.5. So earlier in the week, I'm watching to eke out some higher prices, especially tapping this off. I'll get to dailies. Tapping this 41.17, 41.15 cluster. And then right above that, we have 41.40. Right in here, the gap open from the key reversal on September, all the way back at September 13th. We're at the upper end of this upwards channel pattern. Remember, we're at the top of the downwards channel pattern. So, and then above that, the next major harmonic is 41.91, and we have another topping area back from August there. We have lots of key overhead resistance, but it'll be very interesting to see where this week closes. Also, remember, we break below 39.55. It's also below the daily rotation zone, and this key support that's been solidified multiple times on a closing basis over the last week. Below that 39.14 area, which is the prior major breakout area, the rising 50-day exponential. And depending on when this starts pulling back, because we should be getting a pullback on cycles on the daily and weekly. Daily could still go up a bit at the beginning of the week. That's why I'm more so watching to the end of the week now. But if we start breaking below this channel, let's see, like we have Monday, Tuesday, Wednesday, Thursday, you start breaking down here and the bottom of the channel breaks, the 50 breaks, and that key support breaks, it could get interesting down below. But any pullback to this area will be key going into the Fed meeting, not this week coming up Wednesday, but the following Wednesday. Hello, Martinez. People are still spending, yet they're pulling back because they're spending more but getting less. You saw holiday sales so far. Yes, they were a slight uptick, but if you adjust for inflation, they are way down from last year. So people are spending more. They're also starting to put more on credit card, and the savings rate is dropping. By the way, I did record the Jim Iorio Futures Edge podcast with Jim and Bob on Friday. That will be releasing tomorrow. You'll get to hear some of our thoughts on that. It should be a good episode because this will be the last time I am on until January of next year, unless we release something specially. Now, if there is something with key levels going into the last week of I will make sure everyone's updated here. I might not be on the podcast to do it, but I will make sure everyone's updated. NASDAQ, remember, we're still in that triggered double bottom that keeps stalling out. This 12,140 area is key. Above there, my targets are 12,220, and then my key target I'm really focused on is the 75% harmonic, 12,368. Hey, Daniel. By the way, if you're tuned in late, which is fully understandable, holiday season in December, please hear my thoughts at the beginning, so go back and rewatch the beginning. I think it's important. Yes, you still have a double top in play. You need a close on a daily basis below 11,524. We did get that close. We could see a retest of the lows from the beginning, the mid-October, and the beginning of November. So do not ignore that. That's my key breakdown area for the NASDAQ. And right in this, you can even see on Friday the pullback into the rotation zone. With this, also Friday, Jim wanted to wait till the stream here. We got that pullback. We can project our next harmonics. And look at this. So if we start breaking to the upside, we now have a triple cluster. A triple cluster. We have the 12.5% harmonic projection. We have a 75% harmonic retracement. And we have the first target from the double. So that will be key. And we have a declining trend line still from a weekly basis. You see here. I actually need to update. It's not a true trend line. Your true trend line's a bit... your true trend line would really be like this. So I'll just leave it at that, but that's going to be key. That was more of a modified best fit line I'm using. But if we use the true trend line right here, the way we teach at Path Trading, you have that up there. If we were to plow through that, 12,560 is the next key with the declining 200 and the 25% harmonic projection, and then 12,677. Support. Actually slightly bumping down my key support level. Right to about 11,882 to 11,900. Hey, Options 22, happy Sunday. Again, for people tuning in late, you'll want to rewatch the beginning of this. I have some thoughts on stuff. Not that I don't normally hold back. Also, I will repeat, tomorrow's live stream in the morning might have to start early. I will put information in Discord, but if you're not a member there, if it does start early, pay attention. Hopefully you've rang the bell. Hopefully you've subscribed and have rung the bell for all notifications, because if I need to go on early, that means I'm stopping early. Then you will get notified. The Dow, my key level at this point that I am utilizing on a daily closing basis is about 33,850. to 33,625. A close below 33,600 roughly. 33,575 worst case, then going to start watching for the bigger pullback there. No, not a double top here. We have stalled out at that harmonic area. We push higher tomorrow, 34,783 and then 35,125 are key. Russell, still, yes, potential double top in place. Needs a close below 1820. Other than that, my next key target area that I'm watching for tomorrow, the target area is about 1913 to 1975 and a half. 1975 and a half finishes out the bullish pattern that was triggered way back when. That was triggered back on the 25th of October. The DAX, we still do have a potential double top in play. So that's what I'm watching for on the DAX. It would need a close below 14,337 to trigger. Notes. The notes. We had that pullback. Friday. We still have one final target to go to the upside for that double bottom pattern, 115.03. We got to 114.28 and a half. I'm going to be watching right in front of 115.03 at the round number. Remember, from a yield basis, it did complete the double top pattern from the yield basis. We still have a little bit to go on the 10-year. My minor support is coming in at Friday's low, about 113.25. My major support is 113.12. Let me just jump to that yield right now. Yield curve, remember also the 10-2s before we get to the yield, is putting in a potential double bottom potential, but strong rotation back down on Friday. And here is your 10-year. Where's my 10-year yield? There it is. There's my 10-year yield that did complete this double top pattern. Double top pattern completed. From the aggressive side, it's nearly there. We'll probably complete tonight, but the conservative side completed. I'll just leave the aggressive side on. So that's where that sits. Hey, Nas Industry, thank you for being here. That's so laggy. The stuff I follow on a monthly basis, we should still see substantially lower prices. This works pretty good on a monthly basis. Follow the Copic curve. All right? Until this starts bottoming and turning up, and this is nowhere near turning up yet on a monthly curve, then we can start watching for a much more substantial bottom play. That's a little tip. That's why you tune in here. Look at all this wonderful information. All right, where do we sit now? Dollar index. Friday closed below some key support levels. However, the last sort of line in the sand, I'm going to bump off here, is closing right at that. I am starting to watch for a bounce. If we get a strong bounce in the dollar, there's no great bottoming signal just yet on the longer term, but I am keeping an eye on the dollar very closely. It is getting very, very oversold with cycles getting closer to the bottom. We do have key overhead resistance, but if it were to regain that 200 on the daily, it could be some more damage coming to the stock market. So I will be watching that dollar index very closely. We start breaking down on the closing basis below this 103.65 area. The next target isn't till 102, 101.94 to 102. VIX, remember, closing in the 19 handle and below the support from August. So the next support area isn't till 1858, but the VIX getting very complacent. Very complacent, but there is no reversal pattern yet. Crude confirmed a double bottom, but not triggered. It's still in play. The rotation zone's out of the way, so we need a close above 82.36. Other than that, I'm watching. Guess what I'm watching? Guess what I am watching here on the minor stuff. Here we go. I mean, I'm sure the longer term viewers know. I'm watching 77.25 is my key support. You're welcome, Daniel. Hey, Lucas. Glad you are here. Thank you. Charles Lucas. Sorry, I said Lucas. Charles Lucas, thank you for tuning in. Hope you consider being a subscriber here. George will remind me I can't stick around super long today to look at a lot of stocks. I just want to get through this. By the way, gold players and metal players, I'm watching for a pretty key top putting in this week. It's still, from my perspective, tradable around a core position, but I am watching for pullbacks. And we do go into the metals on the podcast. So I'm not going to dwell on it too much here, but we start dropping below Friday's lows. Cycles are at the top in overbought and very extended. We start dropping below Friday's low. We have some gap left behind, so I'm watching for a return to at least the daily rotation zone and major support coming in at 1734 to 1740. What else is very key just in terms of currencies? Euro, we'll watch. Key supports coming in the euro is about 104.20. So pay attention to that key area, 104.20. That would be a pullback into rotation zone, still holding above the 200. The line in the sand is coming in about 103 at this point. And not until we get below 103 will I start watching for a more significant retracement and breakdown. Pound went through our harmonics and came back to the 50%. 50% from the major pound sell-off. This is a very key toppy area between the 50 and the 62.5. So I am on alert for a potential pound rollover, but nothing yet. Nothing yet. And technically, we don't even have a great pausing bar here, but these harmonics do reinforce that 62.5. So I'm going to use that 125.55 area. But minor, you see breakdown level, retested, resistance, forming this little mini top from back in August. So we're right at some key resistance area. So I'm going to really be interested to see how the pound starts off this week. You have been silently stalking for weeks. Hey, I'm just going to get... I cannot pronounce that. Hazir? Is that Hazir? I will look at Bitcoin in 1 second. Thank you. Looks like we're getting more and more new people. I'd like some feedback from the new people too. Let me know what you think of the channel. We're trying to do stuff that, there's a lot of technical analysis out there. We do our own thing. I've been doing this since '92 when I was an options market maker. I've traded all over the place. I'm currently in Chicago, but I've traded Vancouver, New York, Switzerland as an options market maker. Been doing this for a long time. Bitcoin. Still, now we have a base forming. My breakdown level, the minor breakdown level is 16,850. We get below 16,850. The key area you'll want to watch on a closing basis is 16,150. A daily close below 16,150 shifts the probabilities to retest and most likely break the lows. The minor breakout level I am utilizing is 17,160. Why 17,160? Because key close, reversal open, test with highs, way back from the 14th of November, test with highs. If we break from there, is that everything's back to hunky-dory? No. No. We would just be re-entering the weekly rotation zone. Where I'd be watching for the next rotation lower for newer people here. Weekly rotation zone, rotation lower, rotation lower, rotation lower. Every time we enter it so far. Is it a guarantee? No, but it's a highly predictive area. Now, we're getting to cycle bottom, so we could see another pop. We could see another pop into the rotation zone, but is that a long-term buy or a short-term? If you're playing any breakouts, take something off the table. The next key target area I'm utilizing, we're going to put up a couple things right now. The next minor area I'm watching is about 17,717 to about 17,856 to at least raise stops if it does break out to the upside. The more substantial, if it continues to run, is 18,470. Why? That's the 50% harmonic from the sell-off. And you have the breakdown zone. And overhead from a weekly basis between the key rollover zone between the 50 and the 62.5 is that weekly breakdown zone from 18,800. So anywhere up in here, if it were to plow up into that area, would be another area I'd start watching really for shorts. If it does continue. Real quick. Come on. There we go. With the Tesla. The old Tesla triggered that very sloppy because of the limited right shoulder on here. But as we talked, you can still use those targets. So bounced off the first target on Thursday. That 1978.80 area, 198.80 area. You plow through there. Minor will be back to $200.80. And then the next key target area I'm utilizing is 204 to 205.75. The breakdown area, and remember, we also did close above the 62.5, but pretty much the target for that was the 87 to the 100. The next key area higher, then let me repeat that. The next key area higher is between the 50 and the 62.5. So I already covered this minor target area. But my more substantial area, if we did continue a rally, would be 210. The rollover play, we'll cover that if we start doing the breakdown of that. Let's see. For new people, the earlier video sector preview info was good. Well, thank you, Daniel, and thank you for letting people know. What else do we have? We have SBR for George. SBR. Power move up, bouncing off the 62.5. Remember, this is the potential topping zone. But it's closed above, not only the 50, it's closed above this key support. The next key area I'll be watching on the closing basis is still 83.86. A close above 83.86. I'm targeting 87.39. On a pullback basis, you don't want to see a close back below 80.34. Because then we'd have a complete reverse breakout. Also, the 50 would have not held, and this prior resistance becoming support would not have held either. So that's going to be on the short-term plays. Those are the levels I am utilizing. If you want the retracement levels to utilize, then your key level on to really trigger a reversal is about 78.50. But Friday, you see here, it's a channeling, but you do on the shorter term basis, the 4 hours into a clear path move. You still do have gaps behind. So pay attention to those the potential gap fills also. Oh, thank you for checking that out, Charles. There's a lot of useful information up on this channel, at least I think so. But I'm probably somewhat biased. We're not going to dwell too much today on things. Apple, remember, if we do have strength, I'm watching for this close above 148.63 on the daily basis. because it did a breakdown. Then we got the strong reversal on JPOW Wednesday. But the next thing, if we do get that close above 62.5, it favors a return to the 87.5 to 100 area probability-wise. Not guaranteed, but favors a return to there. So that's what I'm watching. Other things, yes, this is still technically a double top. Technically a potential double top in NVIDIA, but it's a long way off from triggering. I am keeping an eye on it if we start getting that bigger market pullback. Friday's lows pretty key for NVIDIA traders in a short-term basis because that's the top of the rotation zone and the prior just mini breakout level. We get down to there, we could easily retest JPOW Wednesday lows. AMD has turned into, this is now a triple top, so there's no double in AMD. Still watch the lows from the Thursday the 17th. I'm just going over a couple key things to keep an eye on. Microsoft, the potential double top, clearly off the table. But Microsoft, pretty interesting for a potential year-end play, triggered the double on a weekly basis. I'd be watching if we do get the market pullback for key closing support about 243.70 area, as long as we don't get the stop for the doubles down here. But on a minor pullback, that's going to be key. But this could easily still make a run into the year end with Microsoft. So Microsoft's on my radar screen, especially after a minor market pullback for a continuing bullish play. Also, the 62.5 is right at that 50 EMA. So guess what I'll be watching on a key closing basis? And look where the 200 is on the daily. Just above there. So that's my next key area. So if you're watching now, cycles are at the top. So that's why I'm watching for some kind. I would not be overly aggressively chasing this. It might pop for a couple more days. But if you're looking for a more substantial play, possibly going into year end, I would be looking after the next pullback. So it would be a minor play to the upside and then a more significant play to the upside from my perspective. But it has triggered. And you can even see the trigger on the daily basis was on JPOW Wednesday with a pullback to the trigger point on Thursday and even a little gap down on Friday. So there were multiple daily ways to get into this, but then it was confirmed on a weekly basis on Friday's close. Intel, right now, it's transitioned. I'm watching for another rollover play. It's now turned into a horizontal channel. Again, this is to be traded, from my perspective, on pullbacks from a core position. But the key area I'm watching is between 27.96 and 27.12 on a pullback. If you're not in something already, the key area to watch for a breakout is a close above about 30.25, roughly around 30.25 on a daily close, or a break above that intraday with momentum and then triggered by a close, as long as it closes above that level. Then I'd be watching for this gap fill left behind, okay, and a retest of the high areas. But a retest of that high area could make it into a bigger potential topping pattern. So this would only be a very short-term trade for me. Long-term, I love Intel. I would love for another pullback trade in Intel to reload on some, especially with that dividend. So that should give you an idea of where we sit. I'm going to wrap this one up early. I got to take the 5 doggies out for a walk. Thank you for tuning in. I will be back tomorrow morning, and I will see everyone then. Bye.